Yesterday, after completing the recording of the market wrap, I just realized that I've completely missed out scanning the Nifty 200 that we generally do. So I should do it first today, not taking any chances. Here I am with the Iris Plus software, data all updated. Let's come to technical query, Nifty 200 chosen. Let's load the InstaView scanner, which will help us quickly figure out which are the stocks within the universe which have satisfied these conditions. NMDC and Tata are inside bars. Well, NMDC definitely looks like an inside bar, but not very promising. The stock's been in a downtrend for quite some time. This is the weekly charts. Some decent divergences shaping up. Too early to comment, but the range of the candles for the last 3 days are not exceptionally, but pretty wide. The good thing is the stock is at pretty good supports. Past levels of around 132, 133 has been working pretty well. But this is not a very good inside bar breakout trade for tomorrow. Tata, I think we've been talking about this stock from a medium-term perspective, the degree of correction and the bounce back. But again, this is also not a very good candidate for an inside bar breakout, primarily because of the range expansion that we had noticed. It's looking like a belt hold kind of a pattern. But yes, if you ask me, a closer look at the stock, if we zoom in and take a look at today's high 13.85, yesterday 13.95, which clearly tells us 13.14 is a sure short-term breakout level for the stock. I'm not too confident because it had a clear proven resistance at this juncture. So even if it moves above 13.14, as it approaches 13.30, it might probably start to face some resistances. So intraday, quick hit and run kind of a trade, maybe better than NMDC for sure. What about the bullish bearish Rami patterns? PEL, no, pretty long range compared to the mother candle. We generally call the previous bar mother candle and the smaller bar, the smaller candle, the baby candle. In this case, not such a good looking. Same story with Bandhan Bank also. Bosch is not a bearish Rami pattern because it's a downtrend. SBI card, same story, pretty decent expansion on the upside, and then the stock comes down. So the range of these bars. Now this guy, Whirlpool, is not that bad. It's a classic doji, and it is dealing with some very good supports. It's a decent cash market counter for a medium to long term portfolio. Not a bad level. Impressive volumes, if you notice, pretty high volumes in today's trade. So this one stands out. Page Industries, also kind of stands out. I use the word kind of because of the length of the upper shadow. It shouldn't be that long. We have RBL Bank, definitely know how much it had completely gave away from today's intraday high. This is okay, still okay. BHEL, Ajanta Pharma, no. L&T FH, same story. So we see so many examples today. This is not a bearish Rami pattern because we are in a downtrend. Now this is better. This is pretty good, though the chart is not a very strong one. We are looking at Amar Raja Batteries here. The stock is in a very strong downtrend, very in fact strong downtrend, and this is the weekly charts, which we can see the degree of correction. Not a very strong counter by any means, but couple of things that suggests that a move above today's high, which is 623.7, 624, can definitely give a short-term movement. One is this pattern. Two is we can clearly see a positive divergence kicking in here. Volumes are nothing great, but not a bad setup for a short-term bounce back. Please remember, this is a underperforming stock, not a very strong counter. So be careful. Make sure if you get into such a underperforming stock, long trades should be short-term in nature. ICICI GI, not a very good one because both the candles, both the bodies of the two candles are very small. and Bharat Forge also not so, because it has slipped significantly from its intraday highs. Breakout candidate, before we do the breakout, we can quickly take a look at delivery percentages, and we would like to check those stocks which have seen a delivery of above a lakh of shares, and the percentage wise it is 70%. Nifty 200 is our universe. Let's process this, and we find Bajaj Holding never comes down. Now it's seeing some decent 79%, 65, 45. So the last 10 days, 3 days, it has seen some decent delivery percentages. Crompton is a stock which has seen 71% delivery percentage. This stock is in a downtrend. It's a decent stock to have in your cash portfolio, has been performing pretty well. Has taken too much time to top out, so it's been underperforming over the last few months, but not a bad price to start probably nibbling and adding in your cash portfolio. And then we have Gland. I don't track this stock that closely, but let's take a look at the weekly charts. Looks pretty good. Looks like a stock which is in a pretty strong trend and cooling off. So yes, Gland and Crompton can be prospective staggered nibbling kind of in your cash portfolio possible counters. Okay, let's move ahead further and take a look at those which are a prospective breakout. There we go. So we have Hindustan Aeronautics. I think there is a definite lag between the two computers of mine, because the screen's not changing as soon as they generally do. Definitely not a breakout counter. The next one is NMDC. Yes, we are facing a bit of a lag. Okay, no, not a good breakout counter either. Union Bank, no. Then we have Dalmia Bharat. Nope, it's at supports clearly, but not a breakout counter. Looks good, but not from a breakout perspective. Glenmark, too much has happened over the last 3 days. Better to stay away from these counters. Indian Bank cannot be a breakout. Essentially what I do is I look for those stocks, those who have gone through some pretty good drop in range and volumes, low volumes and low range. So for example, if you take a look at Indian Bank here, stock has gone through a pretty decent correction, as you can see here, and it has come close to its previous highs. So supports are there. 4 days of continuous correction, so not a bad counter from a point of view of a bounce back, but doesn't qualify as a very good breakout. As we suffer a little bit from the lag, MGL no, and finally Imami. Okay, I don't think so that any of these breakout stocks actually stands out in today's trade. The bullish Harami pattern and the inside bar were relatively better off today. Oracle long. Oracle is an intraday trading strategy which gives us prospective bounce backs, but this is the weekly chart. I'm sorry, I need to go back to the daily chart, and I think it makes sense for us to quickly take a look at the breakout stocks once more, because we might be we landed up looking at the weekly charts of those stocks. So let me quickly click through them just to check if any of them stands out. No. Okay, let's come to Oracle and let's take a look at any prospective counters intraday purely. So we're looking at National Aluminium, 2 dojis, wow, downtrend. Now this is going to be interesting. This stock moves quite fast when it moves, so bias is on the downside. Range contraction has definitely happened, so though it's come in our Oracle long, so a move above today's high, which is 91.5, will be interesting. But if it breaks below today's low, then also it's interesting. BPCL, no, the last 2 days the range has been fairly wide, so let's stay away. NMDC, no. HAL, nope. Ashok Leyland, yes, I like the fact that the last 2 days the range has been coming off for Ashok Leyland, and so in case we get a move above 124.2, now stock closed at 119.7, a move above 124.2 is little far off, right? So even if this move doesn't come tomorrow, you can put an alert, you can check, keep a close look at the stock eventually if it moves. State Bank, in fact most of the banking stocks have slipped significantly from today's intraday highs. Ramco Cement, I wonder why this guy didn't come in our Harami bullish bearish Harami scan, because the body is marginally outside of yesterday's body. This looks interesting. This definitely looks interesting. Range contraction for the last 2 days, almost like a beautiful bullish Harami pattern. Volumes have picked up a little bit, but then it's still okay. Significant correction from the stock. Close, broken previous swing lows. Not a bad place for a little bit of bounce back. IRFC, no ACC. Interesting, really interesting. Nice 2 small bodies, one right after the other. Oversold conditions, range contractions. This is also a good candidate. Kotak Bank, no range expansion. City Union Bank, big correction today. Can play a role above 148. City Union Bank, Ashok Leyland, SBI all falls under the condition that if the move doesn't even come tomorrow, but eventually when today's high is broken, you may see a decent move from these stocks. Hindustan Copper also, you can call this an inverted hammer, almost a bullish Harami, pretty low volumes, positive divergence, range contraction above today's high 114.65. We can expect these stocks to give us a short-term move. Oracle short, Cipla stands out, but please stay away from it because of the huge range expansion that we've seen 2 days back, yesterday and today. Also, the average range, the daily range of the stock is far above its average monthly range. So please stay away from Cipla on either side. So there we are, done with our scans. So no feel bad after uploading the video. Damn, I missed out. Now let's talk about the Nifty. A lot happened, and at the close it was a little heartbreaking. Not heartbreaking, not broken yet, but yes, went all the way up till 17,347. Excuse me, what were we talking about? 17,350, 450 should act as immediate resistances, and we have a high of 347. So it's good to see and realize when the markets tend to behave, act and react as per your levels and anticipation. It's always a good feel, which means that what we are anticipating, and the analysis or research that whatever we are doing is kind of aligning really well with the market's real movement. So 350, 450 now proven as a resistance, no doubt. And the degree of the fall is quite significant. I think the 75-minute time frame will clearly portray this movement. This was the first candlestick of the day, and this was the next. So what can we say? As no sign of sustenance from the bulls, and throughout the afternoon then it dragged itself further down. So going back to the daily chart, index closed again a little above 17,033. I like the Heiken-Ashi bodies slowing down and creating inside bodies. This is a good sign. This is a good sign. This is the first sign that the index is probably slowing down. Pretty high volumes. This is the Nifty cash futures, near month futures. So we can see pretty decent volumes that we've not seen for quite some time. So a lot is happening now. Divergence is kicking in. So it seems like the index is getting ready eventually to give us a nice move. Which direction? Let's see. If you ask me, the trend is down, and it always makes sense to stay with the trend. And we have levels down here. We have spoken about that. We are not too worried about this. But the surprise element on the upside, but that can only happen above 17,350, 450. I would suggest, as long as the index stays below this level, if the index doesn't find itself above this 350, 450 zone, do not go overly bullish. For your trading portfolio, for your investment portfolio, of course, If you look for stocks which have corrected more than 20-30%, you'll find some good stocks, so you can nibble into them. But I'm purely talking from trading portfolio, not yet. Bank Nifty was a pretty big culprit here, down almost 1%, slipping significantly from its intraday highs, and we've seen most of the banking stocks that we clicked have slipped quite a bit. So that's one heavyweight which slipped. Divergences are kicking in. You know what? If the lows are broken tomorrow or day after, it can lead to a trap. So let's see. Auto was another sector which slipped, and metals. Now this is not good news for CNX metal, because this was supposedly pretty strong supports. The index has broken below that. So I would suggest wait for the sell-off to slow down, and we can see energy, OMC especially were the culprits there. Small cap led, in fact, is one pocket which moved, bounced back, moved up and stayed well. Okay, CPAC, real estate, IT, completely in a range bound. Important level will be this low for CNX IT. So overall, it looks like a divided market. 50% of the sector is positive, 50% of the sector is negative, and nothing much to take away apart from the fact that the negative trend and the negative sentiment stays. We reacted from proper anticipated resistances, and so let's hope that over this week's time the selling will probably slow down or exhaust itself for a better bounce back. I did use the word dead cat bounce yesterday, I believe, so that's exactly what has turned out to be. Amongst the stocks, which are the top 17 stocks which make up our Nifty, Tata Steel, very obvious. We spoke about the CNX metal as the biggest sectoral loser in today's trade, and Tata Steel is losing some more grounds back to its important levels here. A quick drop of volume profile. I would like to drop it from this high to this low today, and just to see that any kind of buying, whether it's coming in at these lows. Nope, nothing at all. So stay away from these stocks. Kotak Bank gave away all its recent gains, not a good sign. HDFC is a heavyweight which matters to the index, is also weak. So few stocks are not looking good at all. These stocks are not looking good. TCS, Infosys, HCL Tech are the ones which held up, but trust me, they are bouncing back, and most of them are in a downtrend. So TCS is in a downtrend, HCL Tech is also in a downtrend, Infosys is just holding there. A break below these lows will not be a good news for Infosys either. So I think we can wrap it up by saying the need to stay careful in the market continues. There is no need to compulsively trade tomorrow, or probably till the time the market settles down. It's definitely not settling down. The trend is definitely weak. So if the lows get broken, if further downsides we see, that should not be a surprise. The good thing that the market has done for us today is 350-450 range tested, proven as a resistance, and now we can only look for the index to go above that to show some strength. So stay put, stay tight. If you've managed not to blow away any of your recent earned profits in this volatility, you must have done good for yourself. I would personally suggest let the dust settle down. Let us get some more clarity. I also use the word reactive. Markets are in a reactive mode. So any kind of overnight positive or negative news related to the new strain of the coronavirus will lead to some reaction in the market also. So wait, what's the hurry? Market's not going anywhere. I hope neither we are in the immediate future. So let's wait for the right opportunity. All right. Thank you. Take care of yourselves. Good night. Trade well and trade wise.